If you're a freelancer and you've ever looked at your bank account, then looked at your bookkeeping, if you even have bookkeeping, and thought, I have no idea what's actually going on here, you're not alone. And there's one mistake, one specific mistake. That's usually the reason why. Here's what it usually looks like. You get paid by a client, and that money lands in your personal checking account. Because why would you bother opening a separate one for just freelancing? A few weeks later, you buy a laptop stand, a subscription, maybe take a client out for coffee, and it all comes out of the same card you use for groceries. Nothing's tracked anywhere except your bank app. And when someone asks how much you actually made this year, the honest answer is, you don't know. Not because you're bad with money, because nothing was ever separated in the first place. And it's rarely just one habit. It's usually a combination. Personal and business money mixed together, expenses tracked only when you remember, revenue treated like profit, accounts that never get double-checked against the bank, and the whole thing dealt with exactly once a year, in a panic, right before taxes are due. None of this happens because you're careless. It happens because nobody hands you a bookkeeping system when you start freelancing. You get a client, you get paid. That's the whole onboarding. There's no HR department setting up payroll deductions or a finance team categorizing your spend. It's just you, and bookkeeping feels like a later problem compared to actually finding clients and doing the work. On top of that, a lot of freelancers genuinely believe bookkeeping has to be complicated, spreadsheets with 50 tabs, or expensive software with a learning curve, so they avoid starting at all rather than do it wrong. The result is a kind of quiet avoidance, not laziness. Avoidance of something that feels bigger and more technical than it actually is. Let's make this real. Say you're a freelance designer. Over the year, you bring in $42,000 across a handful of clients, all of it landing straight into your personal checking account. You buy software subscriptions, a new monitor, pay for a co-working desk some months, grab client lunches here and there, all on the same debit card you use for rent and groceries. Come tax season, you sit down to figure out what you actually owe. And you're stuck scrolling through 12 months of bank statements trying to guess which $40 charge was a business lunch and which one was just lunch. You end up either overpaying because you can't prove half your deductions, or underpaying because you missed income that came in through a different app. Either way, you're making a financial decision. What you owe the government, based on a guess. That's the real cost of this mistake. It's not just disorganization, it's decisions made blind. The fix isn't complicated and it doesn't require an accounting degree. First, open a separate bank account for your business. Even if you're not an LLC, even if you're a sole proprietor, a second checking account with your name on it is enough to draw a hard line. Every client payment goes in, every business expense comes out. Second, track every transaction as it happens, not months later. That doesn't mean logging things hourly. It means picking one system and putting things in weekly, not annually. Third, separate revenue from profit in your head, permanently. Revenue is everything that came in. Profit is what's left after every expense, and it's almost always a smaller number than you think. Fourth, reconcile monthly, meaning you actually compare what your bookkeeping says against what your bank says, and make sure they agree. And fifth, stop treating tax season as the deadline for figuring out your numbers. Your numbers should already be done by the time taxes come around. Tax season should just be filing, not discovering. Here's how to turn that into an actual habit instead of 5 things to remember. Once a week, same day, every week, maybe Friday afternoon, spend 10 minutes logging any new income and expenses. That's it, 10 minutes. Once a month, do a proper reconciliation. Pull up your bank statement and your bookkeeping side by side and confirm every transaction matches. And once a quarter, take 15 minutes to actually read your numbers. Not just record them, read them. How much did you make? How much did you spend? Is that in line with what you expected? That's the entire system. A weekly 10 minutes, a monthly check, a quarterly read, no 50-tab spreadsheet required. The one thing that makes that weekly 10 minutes actually take 10 minutes is having one simple place to put everything, which is exactly why I built Fixbooks. You log income and expenses as they happen, they're categorized into a real chart of accounts, and your reports update themselves. So, when reconciliation day or tax season rolls around, the numbers are just already there. If you want a simple way to keep track of your income and expenses without paying a monthly subscription, you can try Fixbooks using the link below. And if you'd rather have a professional help you set everything up or manage your books for you, we now offer bookkeeping services as well. Links below either way. See you in the next one.